If your trade are still getting liquidated in this bull market, then you definitely need to watch this video. Hey everyone, welcome back to my channel. Even though we are in a bull market, buying a particular crypto with leverage can be dangerous if you don't first analyze the chart thoroughly. Remember, all trends have a pullback. The percentage pullback can be as high as 50%, which means if you are using leverage as small as 2 and the market pullbacks by 50%, your trade will get liquidated. And without proper risk management, your entire capital can get wiped out. In this video, I am going to show you how to avoid these pitfalls and trade crypto safely and effectively. Let's dive into it. Alright, so we are going to be analyzing this chart. We are in a bull market and most coins are pumping. In case you are thinking of buying a particular coin, let's say Bonk for instance, which is the chart we're going to be analyzing today, the first thing you need to do first before you buy that cryptocurrency, especially at leverage, you have to first and foremost analyze the chart. Because we're in a bull market, most charts they are showing an upward trend. Upward trend means it's going up this way. Alright, so this is an upward trend. That's a very good thing to first and foremost check before considering buying a particular cryptocurrency. So now that we want to buy this cryptocurrency, to know if this is a very good level to buy, we have to first and foremost check the trend and to check where the price is. So let's try to get our path indicator. So we go this way, it comes this way, goes back this way, it comes this way, then goes back this way, come back this way, goes down this way, then we are somewhere here. Okay, let's say it goes this way, then come back this way, and now we are here, right? So you want to know if this is a good place to buy or not. First and foremost, you have to consider that, okay, we are making higher highs, which is a good thing. But at this level, we didn't make a higher high, right? But that is not my point presently. I just wanted to focus on something very, very important. If you look at it very well, the prices goes up and comes back. There's always a retracement. It goes up and comes back. There's always a retracement. The price doesn't just go up. It goes up. It can go up even more than the previous upward movement, but it will definitely come back. There's always a retracement. Price doesn't just go up, it always retraces. So before you place a buy order, you have to check how far can this price retrace from this price that I am buying now, and that bullish trend will still remain. Let me explain. Look at where the price is now presently, right? The previous high that we had before this present high, look at it. This was the high, then we have a new high. This was the high, then we have a new high. This was the high, and we have a new high, right? So now we are in this high. So the previous high that we had before is usually going to correspond to this present low. It should not be lower, or it should not, the previous high should not be higher than this next low, right? So what I'm trying to say is, when the price comes down, it can actually come down from this level to just close to this previous high and shoot back up. It can shoot back up from this. Okay, let me get the path key again. The price can come from this high down to this, corresponding to this previous high, right? It can come down to this level, then shoot back up, and it will still be normal. It will still be a normal regular bullish trend. It will still be a normal regular upward trend, right? So if you are buying at a leverage at this level, you have to consider that this price can come down to this level, nothing abnormal has happened, and shoot back up. It is still a normal trend, right? So buying at this level, and you want to use a leverage, you have to first and foremost check that your leverage is not too high enough, so that even if the market should move down this way, your trade will not get liquidated. The whole of your capital will not vanish, right? So you have to make sure you check that if this trade should retrace this way, it doesn't liquidate your account. right? So if he doesn't liquidate your account, you can choose to buy here, because this is an upward trend, right? This is a bullish market. What it means that the price will keep on going up and up and up. There's no doubt about that. It keep on going up and up and up. But when will it go up? We don't know. We don't know if it's going to retrace down before going up, right? So what you should be scared of, or what you should be concerned about, is the retracement that is going to make before it goes up. Everybody knows it's going to go up, even the sellers, even the buyers. They know that the price is going to go up eventually, but nobody knows the exact time when it's going to go up. Just think about it. If everybody should know the exact time the price is going to go up, then nobody will be selling. Everybody will just be buying, buying, buying. And if there's always buyer and no seller in the market will not run. The market is only running because there is buyer and there is sellers, right? So the only way for the market to move on smoothly is because there is some level of uncertainty. And without that level of uncertainty, the market will not move. Because if it's so clear that the market must move up, everybody knows, everybody will buy. And if everybody is buying, who are they going to buy from, since nobody is selling? Right? So there is always this level of uncertainty in the market, and because of that level of uncertainty, that is why when some people are thinking it's a good opportunity to buy, at that same particular point in time, at that same particular price, some group of people will be thinking that is a good time to sell. Right? So those people that are thinking this is a good time to sell, they are called what? The bears. While those that are thinking this is a good time to buy, they are called what? The bulls. But don't get it twisted. The so-called bears can automatically change to the bulls in a very, as in the next minute or in the next hour. And the so-called bulls can change to bears in the next hour. Right? So it's just a matter of what is actually happening at the market at this particular point in time. So let me try to explain further. Once the price is here now, right? So there are some people that, oh, the price has come here. They will have the mindset that this price is going to fall down. And why do they think the price is going to fall down? Because they know that the market doesn't just go up forever. It always goes up and down, up and down. So those people that think that the price is going to fall down, at this particular point in time, they are going to what? Sell. If they are selling, then what? They are called what? The bears. But it's not only those that are selling directly that are the ones selling. There are some that at this particular point in time, they've bought, but because of some reasons, they are actually closing their trade. So once they are closing their trade, it is regarded as they are selling. It's just like, let's use a real estate for instance. You bought a house, right? And you have this house. And now you find out that the price of that your house, your property have appreciated. What will you do when you find out the price has appreciated and it may fall down further? What are you going to do? You are going to sell it, right? So if you, even though they are bullish, even though they believe in this cryptocurrency and they've bought it, but now they feel that the price is going to fall down, they sell it, they are going to be regarded as what? Bears at that particular point in time. Why those people that are going to be buying at this particular price or at this particular point in time, considering this particular price, they are the ones that are called what? The bulls, right? So the bears and the bulls, they are always competing. This bear will come, oh, I want to sell my crypto at this particular price. Why the bulls will come, I want to buy this crypto at this particular price. So both of them will now start negotiating. There's always a constant negotiation between the bears and the bulls on how much I want to buy or how much I want to sell, right? So if you look at it very well, most people, most good traders notice that, okay, the previous high was at this level, right? So they will know for a fact that the price of this particular cryptocurrency can fall back towards the previous highs. So what they are going to do at that particular point in time, they are going to place a lot of what? Buy order at this level. This is where the price is, right? But they want to buy this cryptocurrency, but they don't want to buy it here because they feel that the price is what? Too high. Look, that is what this stochastic RSI indicator is even showing us, that we are moving towards the overbought region. Because this side is called the overbought region, then this side is called the oversold region. When this stochastic RSI indicator gets to this level, we say, oh, this particular cryptocurrency is at the what? Overbought region. So most times, most traders will want to sell their cryptocurrency at this level and wait for the stochastic RSI indicator to fall down maybe towards this oversold region. Then they'll be thinking of buying, because that's a very easy way to trade, right? You just wait. Once the price is here, you say, okay, the thing is around what is oversold region, then you sell it. When the price fall down, you say, oh, this thing is over what sold region, then you buy it, right? So most people use this indicator to trade, and it's effective but not 100%, right? No indicator is 100% effective or 100% accurate, so you have to take care. Most indicators are just there to guide you. They are not there to dictate to you what to do. You are just going to look at the indicator and make your own informed decision from what the indicator is saying. Like if this indicator should go up to this overbought region, this indicator is suggesting to you that this cryptocurrency is too expensive and it is advisable to sell it, right? So when most traders see it at this region, most of them, those of them that have bought this particular cryptocurrency and they're holding on to it, when I see this sarcastic RSI indicator showing it at this overbought region, most of them were going to sell it. Why? Because they feel that the price is going to fall down back, and when they sell it, they are going to hold on to their cash, hoping that when it fall down back to maybe at this level, they are going to buy it again. Just imagine you have something worth $10,000, right? And you sold it, you have $10,000 cash, and you just wait maybe in a week or two, the price of that same property fall down to 5,000. Meaning when you can just wait for like 1 week or two and the price fall to like 5,000, you can buy twice or two of those properties with the same 10,000 which you had. But if you are just hold on to it at this level and the thing fall down, the same property that was costing $10,000 will be costing what, $5,000 in a week's time. So what do you think is the best thing to do? Most people feel that okay, the best thing to do is to sell it when the thing is expensive, and when the price fall down to maybe half the price, they can now buy and maybe buy twice of that same property, right? So that's just the logic involved in it. So once it get to this level, and we are seeing that it's going to overbought region, most crypto traders will want to sell, and those that want to sell, they are called what? The bears. And those that want to buy at this particular point in time, because they feel, oh, this cryptocurrency is in a bullish trend and this is a bull market, so if I buy it now, it's going to appreciate. Yeah, correct, there's no doubt about that. But what most people fail to understand is that if you are using a leverage, you have to also consider how far can it retrace first before it continues the bullish trend. And that is where most retail traders make the mistake. They will just buy here, so okay, it is moving up, it's moving up, it has moved 20% 2 days ago, it has moved 10% yesterday, it can move 10% or 5% today, then I know I'm making 5% profit. But they fail to understand that each time a cryptocurrency move up, there's always a retracement along the way. It may not come immediately. It can move up for 3 months, 4 months, 5 months, then you now have like 1 month retracement. That is how it always happens. It can move up for 2 hours, 3 hours, 4 hours, then the next hour it will just have a retracement. If you buy at the level where it is up before the retracement and it now retraces more than a certain percentage that your leverage trade can accommodate, you will get liquidated. And after you've gotten liquidated, the price can still go up. And that is one of the most annoying thing about this thing. You bet that this particular cryptocurrency is going to go up, right? You correctly bet that this particular currency is going to go up, correctly in quotes, because you, even though it's actually going to go up, but where you bought it, it is not a good position to buy it, because just assume you bought it at 10,000 and eventually goes up towards 20,000, but before going up to 20,000 it went down back to 5,000. If you had just waited for it to get down to 5,000 before buying, with your 10,000 you can buy 2 plot of it, right? Two part of it. And if it goes back up to that 20,000, you now have 2 of it. You bought 2 of something that was 5,000 and now it's not 20,000, meaning each of those your 5,000 has been multiplied by 4. Do you understand? So that is going to compound your profit. But if you had just bought it here, it was what, 10,000 and now it's what, 20,000, you have just doubled your profit. But if you had waited for it to get to this level, you bought it for this level at 5,000 per piece, and now you got twice of it. And when it goes up to 20,000, you have twice of something, and it's not 20,000, meaning the total cost is 40,000, and you bought it for what, 10,000. So you bought it for 10,000 and now you're selling it for what, 40,000. You have made 30,000 profit. But if you had bought it at 10,000 and it moved to what, 20,000, you are going to make what? 10,000 profits, right? So you see, it is even more profitable to be patient and to be vigilant to know when to buy. So when to buy is even more important than if you are buying at all, right? So if you buy it at this particular level and it comes down back before it liquidates your trade, I'm just talking about leverage traders now, before it liquidates your trade and it goes back up, your profit will be between here and where it is now, right? So this risk that you took doesn't affect you in any way. It doesn't add to your profit, it doesn't reduce from your profit. All that matters is where you bought it and where you are selling it, right? But if you had waited and you've been able to read the chart properly, and you've always considered the fact that the prices always retraces before it shoots back up, because that's how it has always been doing. It will go up, come back, go up, retrace, go up, retrace, go up, retrace, go up, retrace. So we're actually expecting it to what? Retrace. But that is not saying that it must retrace now, right? Because when it will retrace, nobody knows. Like I said, if everybody should know when it will retrace, then there will be nobody buying at that particular price. If everybody should know that this particular cryptocurrency will come down at this level, then nobody's going to buy at this level. Do you know what that means? If nobody is buying at this level, if nobody is buying at this level and some people are selling at this level, that means the price will definitely fall down, because the price will always go to where buyers and sellers agree. If the old buyer in this particular cryptocurrency place their buy order at this particular price, right, and they are sellers, the price will definitely fall to where they are buyers, because there must be an agreement between the bears and the bull for the market to move smoothly. There must be an agreement. So if everybody places a buy order here, but now the price is here and everybody is placing a buy order here, the price doesn't have a choice. It must have to fall back down to where the buyers are, because you have to, the best price, the person that is placing the best price for this particular cryptocurrency at this particular point in time is the one that's going to determine where the price fall to, right? So if the person that is producing the best price of buying order is placing it at this level, this price 0.00028, and there are sellers, what do you think will happen? Of course, the price will definitely fall down to where the best offer is, because this is where we have the buy orders, right? So the price will definitely fall back to where the best offer is. Then when you come back here and it has captured this particular, they call it liquidity. When you come back here and capture this particular buy order, then and only then can it start moving back up, right? So that is how the market moves. So anytime you want to buy a particular cryptocurrency, you have to first and foremost try to analyze the chart like this. You don't even have to be accurate, but just check it, just get a rough sketch like this. Then you know that, okay, the previous high was at this level, right? It doesn't necessarily mean that it must come back to that level, but what it means is that it can come back to that level and yet we are still in a what? Upward trend. It can come back to this level and yet we are still in a normal bullish trend. It can come back to this level and yet nothing abnormal has happened. It is still okay. But you have to also consider that if you are using a leverage trade, just this small retracement can liquidate your trade. This small retracement can make people to lose millions, right? Because if you're having you're using a leverage of maybe 20, okay, let's try to see how many percentage drop that will be. Okay, if it should come back to this level, okay, if it should come back to this level, look at the percentage drop. The percentage drop is about 17%. Do you know what 70% percentage drop means? Means if you are using a leverage of 10, you would be liquidated even before you get to this level. That is how strange it is. If you are using a leverage of 10, your trade or your account will get liquidated before it can come down to this level. And remember what I said, coming down to this level is a normal healthy retracement. It's a normal healthy pullback for this market to move smoothly. And why is that? That's because there are buyers and there are sellers. Buyers are feeling that this is a good price. Buyers are feeling that this market is in a what? Overbought region. Buyers are feeling that the price will have to drop, so they are only willing to offer to buy the particular cryptocurrency around this price at this particular point in time. If that be the case, the sellers have no choice than to what? Come down to where the buyers are. and sell to them at this particular price. So if they sell to them at this particular price, meaning the price have to come down, because why those candlesticks are formed is because it's just an agreement between the buyers and the seller. If the buyer said, oh, I want to buy this particular cryptocurrency at this level, and the seller said, no, this is the price I want to sell it, then the market will remain there until there's an agreement. So it will not depend on who want to shift ground first. If the seller said, no, this is the price I want to buy it, and the seller said, no, this is the price I want to sell it, then this particular cryptocurrency price will just remain standstill. There will be no transaction going on. There will be no movement. But the moment somebody among the buyers just shifts their ground and say, okay, all right, this cryptocurrency is a good cryptocurrency, I want to increase the price I want to buy it to say 0.00003. Let's say you want to increase it to this particular price. And those people that are selling it say, oh, okay, even though it's at 0.003318 now, okay, all right, let me come down a little and buy, or let me come down a little and sell to you at this particular price. Then they've agreed. Do you know what will happen to this candlestick? It will definitely fall down to this price. It will fall down to this price of 0.00003, right? And for it to fall down from this price to this price here, it is some amount of percentage, which is even more than 5%. Let's check it. Which is even more than 20%. Let's check it. So if it come down from here and it move down to, okay, if it comes down from here and move down to 0.003, look at the number of percentage we have there. You can see it, right? It's 9%. So what it means is that if you are using a leverage of 10, your trade is just about to get liquidated. It is just about to get liquidated. Even if it had just moved a little bit further, your trade will get liquidated, irrespective of if you had 1 million in that trade. You had 1 million in that trade and you're using 10 leverage. Your 1 million will disappear from your account. It will get liquidated if it should drop this way. And why is it dropping this way? It is just because the buyers refuse to buy it at this price. It is because the sellers are agreeing to sell it at this particular price. And because both of them now agree at a particular level, and that level they are agreeing is at this particular price, then the candlestick doesn't have any other option. It has to come back down. But then it's going to affect you because you are using a leverage of 10. Because if you should move down a little bit further to get to minus 10% downward trend, then your trade will get liquidated. And this is just the singular reason why a lot of leverage traders get liquidated in their trade. And this is also the singular reason why people lose a lot of money in crypto trading. Because even though we are in the upward trend, even though we are in a bullish market, even though the market is going to move up, Bitcoin is going to get to 100,000, but you have to consider, before you get to the 100,000, how many percentage retracement can you make before you get there? If it makes a 5% retracement from the price it is now, and you are buying it at that particular price, 5% retracement and using a leverage of 20, your account will get liquidated. Even if you have 1 million in your account, it will get liquidated. Your money will disappear from your account. You have to start from what? Square one, right? So before you place any leverage, you have to consider this particular point I'm just making. So therefore, you have to first and foremost analyze the market and make sure that, okay, this is a good position to buy it. Or even if the market should retrace to this level, my account will still be safe. If, for instance, we're using a leverage of 2, for instance, and the market retraces 10%, your account will be showing minus 20%, right? Because 2 times 10 minus 20. Minus 20% affecting your capital will not liquidate your trade, because for your trade to get liquidated, it has to get to minus 100%, right? So if you're using a leverage of 2, for instance, and the price of this cryptocurrency move 10% downward, your account will be showing minus 20%, and minus 20% is still safe. Even though your account is showing some unrealized negative number, your account will still not get liquidated, because for it to get liquidated, it has to get to 100%. So if the smaller the leverage, the more pullback you can accommodate, right? So if the leverage is small, then you'll be able to accommodate more pullback. If the leverage is big, then you cannot accommodate any pullback. That is what you have to consider. Because I see some traders, when they are trading Bitcoin, for instance, they can use 100% leverage. They can use 125% leverage. In Binance, we have 125% leverage in Bitcoin. So what that simply means that if the price of Bitcoin should just drop 1%, 1%, their accounts will get liquidated. If the price of Bitcoin should drop 1%, the amount they have in their account will disappear. Even if it's 1 million they have in their account, it will disappear. Because why? 1% pullback. Because why? They're using a leverage of 100%. Right? So before you use a large leverage, you have to consider the risk involved. Even though if it had gone their way, they would have made a lot of money too. But the risk involved, it is not worth it. Right? It is really not worth it. Because that would just be gambling, not trading. You'll be gambling if you should do it that way. Alright, so I don't want to make this video very long. I just thought I should drop that out here. So if you have any question, just feel free to drop it in the comment section and I'll try as much as possible to address it. But if you want more training like this, you just try and join our Telegram group and ask me any question there, and I'll be so much happy to share more insights. See you in the next video.